Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Kind of a light news day this morning, as you'd expect. We have some earnings trickling in from retail. We're going to talk about some big insider selling in Netflix on Monday. We're going to talk about healthcare stocks getting subpoenaed. The theme of the day, though, is this retail trade. Retail is hot. I guess the Black Friday trade came a couple days before Black Friday. So we're going to talk about all those things on the show today. No guest for the 8 to 9 o'clock hour, but then it is the last Wednesday of the month. We've been doing these bonus hours every Wednesday in November, so we'll do that again today from 9 to 10. We'll be joined by Sean Udall, and then during that hour at 9:15, we'll be joined by Matt Amberson, who is the CEO and founder of ORATS. They're an options research platform. So that'll be on from 9 to 10. Also at 8:45ish, we'll do a little hot potato segment that I came up with. So Joel, that's the setup for the show. What's the word here overnight?
I should just have a button that I hit every day. The SPOOs are in the green this morning, up 4 handles. Strong close yesterday. Went off the board at 43.75. That is your all-time closing high. Hit 31.50 and a quarter in the after hours pre-market trade, and nothing up there, folks. There's just no resistance in the market. Maybe 10,000 in the S&P would be the next resistance point. Crude back into 58 handle, sneaking up towards 60, up 4 cents at 58.45. Gold in the red by 250 at 14.64.90. Silver back over 17, but still in the red, down 4.8 cents at 17.14. Bitcoin up $135. These are the futures, 7,250. Good volume coming into Bitcoin over the last few sessions. We'll see what happens. The Turkey Day discussion about Bitcoin, probably not as much as it had been in past years. Triple D, how you doing? Any surprises for you this morning? Or
There've been multiple surprises. I mean, we talked about the retail Black Friday rally coming early, and it snuck up on us here too, because I always like playing the Amazon into Black Friday. I just didn't think I had to buy it Sunday night. Usually I buy it Monday or Tuesday night, and it feels like it's too late now. It ran 50 points in the last 2 days. So the Black Friday trade is already on. And Dr. J has a fantastic question, Spencer, and I don't think I know the answer to this. Why is it called Black Friday?
I just naturally assumed it was because it's the worst day of the year for the poor people who have to, work and at these stores and deal with the maniacs who shop there.
I'm Googling.
Yeah, I just Googled it as well, actually.
Okay, what is the real answer?
I'm still looking. There's a lot of words here.
Why is it called Black Friday?
Okay. The earliest known use was in the early 50s, gaining more traction in the 80s. I don't know. There have been Snopes debunked a thing that goes back to the Civil War. I don't know.
Google didn't answer it. Oh wait, Google doesn't answer it. So this is the Google answer when you just Google why is it called Black Friday. The earliest evidence of the phrase Black Friday applied to the day after Thanksgiving in a shot. Well, we know what that is. We know what it is. Why is it called that, Google?
No.
when retailers finally go black, make money for the year.
I thought that too. That actually crossed my mind too.
No.
How long has it been Black Friday? Has it been like that for a long time? I don't remember.
It's been for a few decades. Yeah.
A few decades?
Why is it called Black Friday?
I don't know. We don't have a good answer for this.
Why does Google not just answer that? I have a whole bunch of articles on it, but nobody's really giving you the mechanic. Nobody knows. The term Black Friday used to have a much different meaning than it does now. This is coming from the National Post.
No. If you're referring to slavery, Snopes debunked that.
Did it?
Yeah. So they're saying in the chat, it's what Joel just said. It's when they go black for the
That's
year.
what I think too. We'll go with that. Google doesn't answer it. We'll answer for it. It's when the retailers will go in the black. This is when they start making money. The Black Friday.
That sounds good to me.
Sounds good to me too. We're going with that.
Are you going
to? If anybody else has another answer, they can go to us. So we should have researched this prior to the show, maybe, and we would have had a good answer for you. But we're going with that.
You gonna do any shopping on Black Friday?
No. Do I do any shopping ever? So definitely not going to go fight through mobs of crowds to try to save, $20 on a.
I might. I'm flirting with the
What are
idea.
you looking to get?
I may go to Costco on Friday. I've never.
Costco's gonna be the worst. Costco's like Black Friday every day there. You're gonna go on Black Friday? You won't even get in the store.
Well, I have nothing I want to buy. I just want to go.
Be insane. You got Stampede will be in there.
I want to go and be there.
Yeah, no, I definitely don't want to be there. I did Black Friday once, like back when we were like, I think it was at the Bright office. I think I was like 23 or 24 years old, and I got up early, not like this overnight, like I'm going to sleep out and camp out in front of Best Buy, but I think I got to the stores around 6, and I wanted a treadmill, and I was easily able to get that because nobody's buying big ticket items like that. But it was something I never want to do again because everything was just too busy. And I was like, you know what? I don't like shopping to begin with, and this is like horrible shopping because not only do I have to actually physically be in the stores and buying stuff, I've got a mob of people around me. I can't even move in here. So no Black Friday for me. Sorry, I'm not going to participate in the Black Friday sales.
It's more Spinner makes a good point. Cyber Friday.
Well, that's a different point. That's better. I could do Cyber Friday.
All right. Let's
I'm probably buying nothing, let's be honest here.
Dennis,
I don't need anything. You get 43, right? What do you need?
You need some
I got my t-shirts for my show.
Comb.
I got the free Benzinga one, the free Bright Trading one. I'm good to go. I have my wardrobe. My hair is actually not that bad today. I'm good. I don't need anything. I'm good.
Dennis, you failed to warn us about the MSCI rebalancing.
I failed to warn myself as well. I was like, what just happened? I'm like, what did Apple just do? And I'm like getting messages from traders, at Bright Trading. They're like, what just happened at Apple? And I'm like, you know what? I totally snuck up on us. There was an MSCI rebalancing last night. So you saw a lot of moves, a lot of individual moves. Alibaba's running at the end of the day. You saw some smaller gaps. Apple seemed to be the biggest mover that I saw. Of the big names, Apple was huge. Look at what this did. Bring up this chart. Look what this did in the last 10 minutes. Happily trading around 266.5. And then they pulled the rug out from under it. They knocked this thing down $4 on this rebalance, and then it ended up closing at 264.29. It's up $1 here this morning, so it's getting most of those losses back. But man, if you had an order out there, you could have got filled pretty low there on Apple yesterday, right at the close, right near the close. Crazy move. Rebalancing give you opportunities sometimes. And what is a rebalance? And just the components there. They're adjusting the index, and there's some obviously funds and ETFs that got to track. Some have to buy, some have to sell. So you see some sellers there in Apple yesterday at the close needing to sell, and stock obviously fell $4 there in the last.
That's a big move. Big moves. Wow, that's some shorts out there too. I mean, you don't know if it was any combination of any other sellers or whatnot, but bouncing back this morning, up 96 cents at 265.25. Let's see, what do you got here? Interesting area. I mean, I could give you the all-time high at 68 even, but your all-time closing high is 67.10. So if you're looking for another target on that, that is the highest it's ever closed, and that was the day before it made that all-time high at 68. And for a little confluence, your high yesterday came in at 67.16, just above that all-time closing high. So there's a good level for you in Apple. And what else moved? Baba, you said moved?
Baba was running up. So Baba had a pretty good run. Look at the move in the last, I'd say 15 minutes. Went from 192 all the way up to 195. Well, Baba's having nothing of giving it back. Baba's up again here this morning. Like, naturally, you think these are fades. Not the case. I mean, I guess you just can't short anything in this market. It's up another $2.50 here this morning. I guess there was HSBC gave it a buy rating, which probably helping it along.
Well, Dennis, you also have the Hong Kong.
Right. Yeah, the new Baba. Yeah. So that started yesterday?
Yeah, don't forget
Hong Kong?
Yeah.
So I get two Babas. So I need to get Hong Kong quotes so I can arb those two against each other. Okay. Big move here. I mean, we're going to challenge $200 here. It looks like, we've come this far. Why not challenge the $200 area? And when was the last time we were over $200?
Last time we were over $200 was back in 2018 when you had a high, $211.70 that month. But you could go drill down on your dailies and find some different levels there. Trading at the highs of the pre-market session, 197.43, kind of quiet, up 273. 200, maybe throw an offer there out at 200 to see if it gets lifted. boy, 180 when a lower 180 handle a couple days ago, now knocking on the door 200.
I bought a bunch of stock at 145 on that pullback, and I sold half of it at 170. I wish I wouldn't have sold any of it because now obviously it's 197. So I'm gonna hold on to the rest of it. I had in the long-term account, but it came back so fast. I was like, you know what? Let's book half of this profit. And sometimes it works out. Sometimes, you know, you can get the stock back, and sometimes they just keep running. So I guess the moral of the story is when markets are at all-time highs, don't sell.
Don't
Anyways,
ever.
Alibaba up another at 197. So I still got a little piece of it.
All right, let's do some earnings.
Yeah, well, there's a ton last
There
night. The cloud stocks. There was a bazillion cloud stocks report. And where do you want to start, Spencer? We'll throw it to you.
I was going to do the one from this morning first.
Okay, do the one from this morning.
Yeah.
We'll ignore the cloud.
The only one this morning really that interests us, Deere reporting Q4 EPS of $2.27 versus a $2.13 estimate. So a beat on that print. Sales 8.7 versus $8.44 billion. So a beat and a beat on the top and the bottom line for Deere in the fourth quarter. What did they say about guidance there? They said net full year 20 net income range of $2.7 to $3.1 billion. And what did I think that's pretty much it for guidance. They said they see that agricultural and turf equipment sales next year will be down 5 to 10%, and construction and forestry sales will be down next year 10 to 15%.
It doesn't sound good. So the guidance didn't sound great. Stocks trade down 5%. The longs are a deer in the headlights here. I didn't use that right, but we're down here $8. What are your thoughts here now?
Yeah.
I mean, I look 165, nice whole roundish number maybe, or the buy the dipper is going to come in before that, Joel. We know they come in eventually. Where do they come in?
Down 9 sticks here.
I'm not going to be a hero. I'm not trying to call the bottom.
Yeah.
I tried to be a hero yesterday and say, oh yeah, Palo Alto Networks. I think it, could come back here when it was 230. Well, no, it's down to 220.
Did you try that one?
No, I didn't.
Okay.
I was a hero trying to be a hero on the show, but no, I did not try it.
Yeah, I looked at that.
I mean, we did get the other one though, which there was two that fell yesterday, and one actually did bounce back. I don't remember which one that was.
Well, Dollar Tree kept on going down.
Oh yeah, we said we didn't want to buy that one though. We were scared of that. We were looking at, that's what we did. We looked at these two, and we were looking at Dollar Tree at like 103, and I'm like, I'm not interested in this one, or 101. And we looked at Palo Alto Networks, so I was like, I'm be more interested in this one. I didn't do either of them, but anyways, the stock obviously fell another 10 points after that. So win some, lose some.
Trading at the lows of the pre-market session, 167.36. On your dailies, you're taking out 168.15. That was a low. Of course, it hasn't traded that in the regular session. Your next daily low is 166.03. I mean, it's only a buck 80, buck 70 from there. So if you're looking to cover short, that might not be a bad area. The previous day's low was 64.65. That's why Dennis threw out that 165 level. Those are potential levels of support. You've had a couple spikes up to 171, but someone's selling and they went out. Doesn't look like we've found a bottom yet, or an imaginary buyer like I saw in Palo Alto Networks yesterday at 229. They actually opened below that and then took it lower. So that's what's looking. Is it Cat already reported, right? So that's
Cat. When did they report? Not that long ago. Early October.
Let me pull it up for you right now. Caterpillar on the 23rd of October.
Yeah, so you're going back almost over a month ago, but we kind of already have the cat numbers. That's why it's not down as much, but it is still down. It's down 1 point here in sympathy, obviously, with Deere. 145 offer now here, so it's down. I don't expect a huge down move again because we did already get the cat move numbers, but you're going to get a little move down here in it.
All right, before we go to our next earnings report, Mario H, new in the Google chat here, talking about that Best Buy move yesterday and just kept on going, huh?
Yeah.
Wow, gapping.
It's these retailers. Some of them, had disappointed obviously early in the season, and since turned like last week, a lot of these retailers have actually been ripping. I mean, they're all individual stories to a certain extent, but we've seen some of these retailers just rip higher. And it was a pretty good report, and they just decided, okay, we're coming in here and buying it. So we're selling all our Dollar Trees and we're buying all our Best Buys. That's what they were doing yesterday. I mean, now the stock, what do you do now here? Well, if you're short the thing, you're caught big time. So do I expect this to, pull back and give it back? Nah, I think it could be, this could be like a target where it could continue, running for a little bit here.
84.37 represents your all-time high. You didn't quite get there yesterday, 83.63. So that's a potential sell zone if it gets up to that area. If you're looking at this, I'd probably pay more attention to yesterday's close at 81.57. We're trading a nickel above that, so use that as your swing level. Probably since you're back $2 off that high, maybe find sellers at a little bit ahead of it. Even though, you talk about doing trades on the open, if you were so inclined to close your eyes and just buy the open on Best Buy yesterday, you would have bought, even though it gapped up $3, you would have bought 16 cents off the low of the day.
Just kept running the classic gap and go.
Yeah, boy, that is a tough trade.
When retailers beat, like the ones, and obviously we know the Target and the Walmarts, that's a different story. But when retailers that kind of just been hanging out here for a bit, and Best Buy was doing that beat, they sometimes run because the expectations aren't that high. But I mean, Best Buy turned it around. We talked about that years ago. They used to, Amazon was eating their lunch, and they figured out they did the Amazon price matching, and that's how they did it, and that's how they. I don't know if they beat Amazon, but that's how they kept up with them.
All right, let's go to Dell and VMware. Let's do those two together.
Yep.
Okay, so we'll do the Dell numbers first. These are from yesterday after the close. Dell Q3 adjusted EPS $1.75 versus $1.62. Sales $22.93 billion versus $23 billion. So a mixed report for Dell. EPS beat, sales miss. Moving on to VMware, also yesterday after the close, they beat on their EPS and beat on their sales. So a little bit of a better report for VMware in terms of the Q3 than for Dell.
Remember, there is a relationship here. It's difficult to trade them on the relationship basis when both companies reported. I was trying to, and I actually did okay on it. I simply, when the Dow really started falling, I was like, well, there's going to be some arbs that are going to hit the VMware on this, and I was able to get short some VMware, and it came in a couple of dollars. So, but it's still, you can't just flat out put on the pair because and the reason there's a relationship is that Dell owns a huge chunk of VMware. So if Dell hadn't reported on its own, it would be trading up because of VMware. And I typically say it's about 2 to 1. For every 2% of VMware moves, usually Dell will move up 1%. But because Dell had its own numbers, that has a huge impact that has nothing to do with VMware. So that's where, the relationship breaks down, at least for the day. So that's where, and Dell disappointed, and they were actually blaming Intel, I believe, in the conference call, which is why Intel is down as well. If you're looking this morning why Intel's down, there was not negative commentary there, something with the chips, something with the shortage, and they actually, I believe, mentioned Intel directly. And obviously they're trying to point the finger at somebody because the stock's down 5%. But I own this one in the long-term portfolio. It's been kind of a dog. I mean, I've had it and been up in it, and I'm down in it. I was up in it, now I'm down in it again. I don't know what the thing is. Obviously trading ridiculously cheap from a PE perspective, but it's been a value trap. I mean, the thing's supposed to make $7. It's trading like 7 or 8 times earnings. So, but the value traps, it's just out of favor. It's a stock that never came back into favor really in the last year, and continues to just remain out of favor. Now, do I expect this thing to lose 7, 8, 9 points on this? Probably not, because there is value investors here that are probably going to be lurking around even the $50 area. But just keep in mind, if you are trading VMware just on their quarter, that there could be some arbs going on there too. And the VMware quarter was really good. I think VMware would have been up more if not for the Dell disappointment.
Did you get the memo yesterday in Dell? Look at that thing yesterday. 55.06 to 50.
Yeah, they hit it.
Yeah, they hit it in going in.
And you can see if you put the Dell VMware charts on each other, they're virtually identical. These are the only days they get messed up when they both report. So
tough relationship. For Dell, you hit it
tonight.
You hit an after hours low at 50 even. 50 right on the nose.
Yeah.
You have a low right there at 50, 49.93. So there's your area of support. You may get a look at it. Another low under that in the lower 49 handle at 49.26. But we have come off the low, so I'll look at that as potential support, especially after the big hit yesterday. VMware going in the opposite direction. That's up 410. What do you have? Spiked to 172 and change. Very little volume. No, actually, there was decent volume.
Oh yeah, decent volume.
172.40. But I'll keep an eye on this daily high, 170. You have one at 172.53. That's your 5-day high, and your 6-day high is 173.37. So right there with the pre-market high, there's some nice targets for you in VMware. Coming back on the downside, if you're looking for support to fill, it had a big range yesterday too, didn't it? VMware. So you're not trading within a gap here, even though it's moving $4. $4. 171.62 was yesterday's high. That's still almost $1.50 away.
Jump over back to the earnings parade here. We got Viva, we've got Autodesk, we had KYS reporting, we had Box reporting, HPQ reporting. We had some big names.
Yeah, guess the top stock on my down filter this morning.
GES.
Bingo. See, that wasn't a question.
Good pun.
It wasn't a question.
I know. I had to catch it for a second. Guess
it was a statement of fact. So there are other stocks down more, but I filtered my scanner by price and market cap here. So guess is my leader as far as pre-market.
I do that too.
Morning.
I don't care about some penny stock that's down 20, 50% here. I care about the bigger names.
FTNW is down like 15%, but I don't care about FTE networks really. Anyway, so back to guess. Reporting yesterday after the close, Q3 EPS 22 cents versus a 20-cent estimate, so they beat that number. Sales was a slight miss, 615 over 620 million dollars. The Q4 EPS guidance though, that was in line. Fiscal year EPS guidance was in line. So nothing crazy bad from this, but nothing crazy good either. It was pretty much an in-line report.
Not good enough, I guess. The stock ran up into the report. It ran from 17 to 19, so expectations actually, believe it or not, were probably higher coming in, and they didn't meet those high expectations, and the stock's giving back half those gains because of it. I think got nice support down at $17. I'm not sure it's going to get down there, but that's a level that I would look at as a potential. If I was short the thing, that's a level I would look at maybe to cover.
Does give you some support. I'll give you some resistance. The close, might not see that close in 1908, but if you're looking for a gap fill, 1845, that's only 39 cents away. That was the low from yesterday's session. Tennessee 17, I see many lows at the 1650 area if they really want to do some damage in this today. It's already off the pre-market low though. Pre-market low came in at 1760, so it is 45 cents above that.
Autodesk.
Yeah, I was going to say, if you want us to hit a few of the other ones, we can, between the Autodesk and HPQ and Box and ADI. So I guess we'll just do Autodesk here. After the close yesterday, they beat on the EPS, beat on the sales. Q4 EPS guidance was a little bit light. The Q4 sales guidance was in line. They gave some guidance for the fiscal year as well. That guidance was in line for both EPS and sales. So the big numbers there, beat for the earnings, a little bit light for the Q4 EPS.
They hit it down, but cloud stocks are fully back in favor here right now, and the buy the dippers just came in and bought it right back up. So you can see it went down to like the 162 area, and that was just an opportunity that was there for a few minutes, and they ripped it right back higher. I mean, the cloud stocks, you can just go through them and look at them all, and they were in the gutter for a while. They are not in the gutter anymore. I mean, the last month CRM has come back significantly. Probably always your leader there, but if you go to all the individual ones, even like Splunk has just been flying here as of late. Workday, which I bought, on the dip, that's up, 20 points here in the last month or last 3 weeks. There's just a ton of these cloud stocks that have now taken off. ServiceNow and OW, it almost looks like it's a consolidation station now to go higher. I mean, there's so many of these stocks have just turned it around.
161 is where they took it to on that initial surge. And the only thing, you're coming back up now, and I see you did sprint over 172. A lot of price discovery going on here in the 170 handle. I've kind of quieted down in relation to yesterday's range. Let's keep an eye on the close, 170.80. I'd use that as resistance. The longer it takes to start get going green here. Man, this stock just a few weeks ago, 138.62, and now up still near 170. So if you're thinking of buying the dip on this one, there's a lot of people just sitting on profits from the middle of middle of October here that won't fret getting out at 167, 168. So be careful buying the dip on this one.
All right, let's move on. Let's move away from the earnings here. Let's talk about Netflix here for a quick second, because Netflix CEO Reed Hastings has been selling a lot of stock lately. If you go back to late September, he sold about $11.5 million shares worth of $11.5 million worth of shares there. October 22nd, same thing. He's exercising some options or some sort of another $11 million in October, and now it was disclosed on Monday in a filing. He sold another 54,000 shares. So
17 million worth.
Right. So he's been selling a lot of shares in the open market these past few months.
Market just doesn't seem to care about anything. The stock gets downgraded. The stock, obviously traded higher on the day of the downgrade. Reed Hastings coming out selling shares last night again. I mean, we always say and when you look at these, when you look at these SEC filings, it usually doesn't matter that much if they're selling shares. It's when they're buying, because if they're selling, maybe he's just going and buying another mansion. Maybe he's buying a yacht. Maybe he's just having fun with the money. Maybe he's just diversifying himself a little bit there. But when they're buying, there's only one reason you're going to come in and buy, is because you think the stock's going higher. So there's lots of reasons to sell, not as many reasons to buy. With that being said, he's been unloading here, and some people, could read and maybe say, well, he's unloading because maybe he thinks his stock's going to go down. That would be speculation. I don't know. I've thought that the stock, I keep thinking, there's going to be some type of catalyst that's going to bring this thing down. Like I've said, I've been bearish Netflix for a long time. It was looking pretty good. It was 255 or 260. Now it's 312, and it's right back up to the area that I was bearish on it. I don't know. I don't know what to say about it. I've been wrong. I've been wrong at least in the last month. I was right originally, but
Reed sells shares around the 20th of every month for like the past year. This is what Jimmy Vegas is saying in the chat. So
he just does that every month.
Yeah,
Okay.
We talk a lot of. So the Irishman is going to be at theaters, huh?
Well, it has to be if they want it to be eligible for the Oscars, which they do.
Okay.
So it has to be in theaters for at least a little bit.
Man, so there's 3 movies I want to see. Wow. I'm in a movie fast market here.
And Frozen 2.
And don't forget Frozen 2, Joel.
All right, I'll go see
Joel
it.
wants to see that.
All right. Let's go to healthcare here. A number of companies were subpoenaed yesterday in connection to an investigation as to whether or not these companies violated the Controlled Substances Act with regards to shipping large quantities of painkillers. And this all goes back to the opioid crisis in this country. So Teva Pharmaceuticals, Mallinckrodt, Johnson & Johnson, Amneal Pharmaceuticals, AMRX, AmerisourceBergen, and McKesson were all subpoenaed yesterday from federal prosecutors. So those, and it was midday.
Yeah.
I believe this headline hit the
Cardinal Health in there too, I believe.
I didn't see them as being subpoenaed.
All right, it got hit on this too. I mean,
Okay.
Same reason here. McKesson, nothing got hit really harder than that. It was down almost $10 on this yesterday, so it was significant. Teva got hit pretty hard too.
Yeah,
Teva always seems to get hit hard, even regardless of news. I don't know. I'd almost be inclined maybe to buy the dip on. If you wanted in these things, I don't think there's going to be this follow through where it's going to continue. I think if I was short it like a McKesson that had run up, I'd probably be looking to cover. But I don't think I'm coming in here and just saying, oh, I want to own all these things either. I'm kind of like on the fence. I don't know what to say about these. You got thoughts on this, Joel?
I
don't see a pitch up the middle here.
No, I mean, there's always headlines on this.
Yeah,
right?
It's hard.
So, I mean, what are you going to do? Are you going to trade every single headline? If I would just look at, where this, I mean, Teva's not moving. It had this happened intraday yesterday, right?
Yeah.
So, I don't know. Teva's had a nice little run here. A bad candle yesterday, but closed off the low of the session. 964 was the low, trading up a little bit. Under 964, got double bottom at 935, but just a little pop in this stock, a long-term downtrend. So it doesn't look like this news is going to reverse that anytime soon.
All right, it's 8:30. Let's go to the ratings here. There were not that many, but there were a couple that really crossed our radar this morning. Big one seems to be Under Armour.
Yeah.
Getting an upgrade this morning at Raymond James to strong buy. Strong buy there. giving it a price target of $30. That. I don't know if that's a street high, but it's if not, it's close.
I don't know if they were waiting to see life yesterday, but we talked about it. The retailers all showed life yesterday, and we can come and circle back to this Black Friday trade because it's just flat out working. And we got to remember this for next year, guys, the seasonality. I usually like to look at them on the Tuesday or Wednesday into Black Friday a couple of days before. They came in early this year. They started buying these retailers Monday morning, and they haven't stopped buying since. We already looked at it with Amazon, but you can even look at Shopify yesterday. I mean, obviously with e-commerce involved, Shopify exploded yesterday. I'm long Shopify in the longer term account, and it was up $20. But Under Armour had a good day yesterday too. Just out of the blue, returns around and rallies almost a point from the lows. And now you get the follow through with the upgrade here, so you probably got a few shorts scrambling here. There's some room. You're kind of coming to a gap here in UA too. So when you're looking at it from that perspective, it depends which one you want to look at. There's UA and UAA. If you're looking at UAA, they're both very active too. You're looking at UAA. I mean, there's a gap up to like 21. So you're coming in here shorting it now. There's just nothing in here. I don't think it's going to fly right through there. It'd be a huge move for it to fly through there. But we always say, when you got a gap in the chart, there's not much in there, so it can move in there with a little more relative ease. So I think on pullbacks here, if I was short, I'd probably be thinking about covering on a pullback if you got one. I don't know if you're going to get it.
Yeah, trading up here off the upgrade. Let's take a look. Oh boy, up gap into the gap area. Holy mackerel. This is a tough chart.
Real
1864.
tough charts today.
Yeah, 1864, and then gap up to 2078 if you want to use that as a target. I think that'd be a little bit too much too fast for it. Just look for continuation here. Just if you're buying the open on this one, the after hours low 1835, man, that's even above unchanged. I don't know, pass on this one here. This is a tough chart.
To show you how much we care about GDP, we don't.
We just had GDP number.
Yeah, we had GDP come. See, and you didn't even notice. That's
and didn't notice a movement at all.
Exactly.
Maybe we moved up 1 point.
2.1% versus 1.9%, so a little bit higher on the GDP reading for Q3, but nothing crazy there.
We got a big downgrade in a stock that we haven't talked about on the show for a while, and a stock that has been running and running and running.
Oh, yeah, well, that's true. In fact, I haven't even thought about the stock for maybe a year, but Axon Enterprises, AAXN, the company formerly known as Taser, getting a downgrade this morning from Raymond James to their version of neutral, market perform.
They got some guts, because what's my rule? I never like to be short a stock making new all-time highs. Is this a new all-time high, I believe, for AXN? It's at least a 7-year high. Yes, as of yesterday, before the upgrade or before the downgrade. I think that's a new all-time high.
Let me go to my logger.
The stock has just been running and running around. They're literally trying to call top. They're trying to be a hero and call a top. 77.66, I believe, was the all-time high, at least a 7-year high. I don't know if it goes up further than that. And it's down 3% on this. This is a bold call, so I'm not surprised. Obviously they're just going to neutral. Maybe they just think it's gone, too far, too fast, so they're booking their profits. But the stock is just ripping higher here. Could it cool off? Yeah, this stock was $55 3 weeks ago, so it's just again a tough
careful. I'd be careful on this one. You're down 242. You're trading right at yesterday's low at 74.50. Your next daily lows is 72.41. And the only reason I'd say kind of careful on the long side is I think everyone hopped in the pool yesterday on the breakout. Previous day's volume 671,000. Yesterday's volume, the 2-day volume was at yesterday's volume 1.6 million. So people buying the breakout. We got to get in. It's going to $100, and now it's at 74.5. So that's right at the pre-market low. It's yesterday's low. If that holds, bounce up, and they'll fade this. Maybe, I don't know if you'll see your close at 76.93, but I just don't like that $2 gap in the daily lows between 74.50 and 72.41.
There is Boeing news here this morning. If you're wondering why Boeing is down 5 points, it is a headline that was broken on CNBC yesterday after the close.
There's always Boeing news.
There's always Boeing news.
This one is just, if I remember correctly, I'm going off memory, but that the FAA is requesting individual approval for every single headline. Was that something of that nature? Did I remember that right?
There was something from CNBC last night, and it broke, and it started going down immediately after that. Like it was flat, and it's down 5 points on something. I don't know if I don't know what it was either. I don't have it in front of me.
I may have butchered the actual. I remember reading it.
I butchered it too. I didn't even try to attempt to say what it was.
Yeah, the FAA is going to be the sole issuer of airworthiness for all new 737 Maxes.
And they're saying it's not ready for certification. So they're basically saying this plane ain't flying anytime soon. Right?
I mean, yeah.
I think that's kind of what they're saying. I mean, it's hard to interpret FAA statements, but it doesn't sound good. So that's why it's down another $5. I mean,
trading range.
Yeah, we're gonna go and sell this thing off 20 points on this. No, those days are gone. I mean, eventually this plane is going to fly again, so it's installed. I think pullbacks probably to be bought in Boeing. I did it once, and the scalper blood in me got me out of the trade too soon. Wish I would have held it because the stock continued to go higher. It's down $5. Can it leak a little bit more?
I mean, so much. It made this formation, and I mean, as wild as this thing is, it does give you some decent looking trading patterns. You ran up to the 375, 378 area back in October. You sold off, came all the way down, then you came back, and you found sellers in the same area, 375. Now you're backing off. So I don't know, a lot of room on the downside here.
There's room on the downside and room on the upside. I still think buy the dippers come in here, but I'm not going to be the first one.
All right, let's move on. Actually, back to the ratings for a second. There weren't that many other ones that interested us. A
couple Chase and Dollar Tree. We got downgrade. Obviously,
Thank you
the
very
Chasers
much.
out there.
We
got a couple Chase and Dix because Dix had a huge day yesterday. Upgraded at Evercore and Barclays.
And we have a Barclays upgrade to TD Ameritrade and Charles Schwab to neutral. Thank you for playing Barclays. Your contributions.
You get one of those every day. I mean, they're just doing their own thing now.
Change your opinion at all on the long-term implications of the Schwab TD Ameritrade deal?
I never gave any really.
Oh, I know.
What and maybe because it's sometimes confusing. You're doing a live radio show. What I was trying to say is I still don't understand why they knocked Ameritrade. Why they attacked the business and then bought them. I don't totally get that, but I don't think I get the synergies. I totally get that. I think the deal is a good deal for Schwab. I think it would have been a better deal though if they wouldn't have attacked the whole industry with their previous move a month ago to go to zero commissions. So like none of the big brokers did it until Schwab did it. So they could have had Ameritrade maybe and still been getting paid commissions. I think they just did it wrong, but the deal still made sense.
I would argue IB did it first.
It all started with Robinhood. I guess they were just sick of Robinhood picking up all the accounts.
Right.
So they knew they were going there eventually. They're like, we might as well do it. So
I think they had the plan in place before they did that.
Yeah, to knock the price down and make them sell to them. Like maybe that made them desperate enough to sell to Schwab. There could be that obviously that could be in there too.
Yeah.
Maybe that's the reasoning.
I mean, these plans and I think Aviator One alluded to it. They just don't happen overnight. I mean, there's a lot of thinking, a lot of processes.
I think, yeah.
This. So, real quick, we haven't looked at Zoom in a while for Aileen. She's asking about Zoom here.
Sure.
She asked about many stocks, and I mean, it looks good. I love Zoom. It's so easy to work. Hopefully,
product's awesome. Valuations
not
too high for me, but I mean, the stock's coming back. The chart's starting to show life. And this is the way this market is right now. I've actually got 3 or 4 long swing trades on right now that I've been working. I went long Twitter 3 or 4 days ago. I went long Etsy 3 or 4 days ago. I went long Pinterest a couple days ago. I went long another one. I can't remember. These are swing trades. So I typically, me, I'm a day trader. I don't have a lot of swing trades on, but the market's been climbing. And some of these things are starting to show some life. So on Pinterest, I'm going to stop at the low of the move. I was able to get it, around $19. So it's $19.56 here this morning, but the low of the move is $18.37. So I was like, well, I'm willing to risk that. Twitter, I was going to stop out at the low of the move as well. I bought that in the 29 handle. It's now up to 39.6. I'll probably raise my stop up a little bit on that one. And then Etsy, Same story. I was going to stop at the low of the move. I think I picked up on the 41 handle. I was going to stop at the low of the move at 39.81. Just saying, I think these, we're in this little bull run here, and these, laggards that have been, the stocks, the Momo names that have been hit are starting to show life again. So I'm just trying to participate. Zoom fits right into that category. I have no position in Zoom, but same story. The Momo names, the high valuation stocks really got hit. They're starting to show some life again. So I don't know when this, train, I don't think that's going back to the highs or anything. But, for a trade here, that's showing some life. There's room to 80. There's room to 80 on Zoom.
Yeah, I'd say a shorter term target today. If you were looking, you're trading up 84 cents at 76 even. I'm not sure if there's any volume. Really light ticks taking it up here. But my area of interest, not sure what your time horizon is on this trade, but there's a pair of highs up at 77.43 and 77.78. So I'll call that 77.50 would be a nice target. That'd be another $1.50, a couple highs in that same area. So look at that, but the chart looks good coming off the low. And man, it's funny. It came down almost to the IPO low. The IPO low was 59.94. Didn't quite get there, 65.36. So trying. Good looking chart climbing back.
I mean, all the cloud names, all the Momo names have been on the comeback trail in the last couple of weeks. So some of these laggard Momo names that haven't turned yet, maybe there's something there too.
The only thing that really is not, that pot got a lift off that Bank America call. But man, if you just kept in mind, overhead supply, year-end tax selling, that probably saved you from chasing this. The CGC got up to 21.56.
Yeah, I called it a gift. I said CGC had room to 20, and I think it's a gift.
Another.
I still think these things are a lot lower. I completely agree with Mark Yusko. What he said on our show 3 days ago was these could fall 90% from here and still be overvalued. I just don't see the growth. I don't see where it's coming from. I think tax loss selling is going to come in on these stocks in the next few weeks as we're going forward here. You got a little bit of squeeze you have happen in CGC for a few days. Could you squeeze the guys again? Maybe. I don't know if I'm coming in and shorting, but I'll tell you, I'm not putting these in my long-term investment account thinking, oh, CGC is going to eventually be back at 50. I don't think it's ever going back to 50 again. I think it could eventually be in single digits. That's my long-term thesis on CGC. My long-term thesis on all the other ones is the same thing. The competition's too intense. The growth is not there anymore, and the valuations are nosebleed. That's not the recipe. The only reason we saw them bounce was a bit of a short squeeze, in my opinion.
If you feel like you have to own the CGC, you are getting a pullback here.
Yeah.
You had a nice bump from 1381 to
50%.
Yep, and it's 1768 is the 50%.
There you go.
1762 was a low yesterday, so it worked. At least it worked the first time here. So.
If you think they could squeeze them again, that's the bull thesis. I think that's the only bull thesis. I don't think it's like the story that these things are going to get taken over or all of a sudden Constellation's going to buy more of CGC. And they were trying to write off the CGC. They already regret what they bought. So I don't think they're coming in and buying more. I think the bull thesis, the only bull thesis that I can think of for this whole industry right now is more of a short squeeze. And some traders are obviously trading these. I don't know what even the short interest is on these things, but I'm assuming it's probably climbing.
But also you got short squeeze and you got people, looking to dump this by the end of the year. And
yeah.
That's what you had.
That's why I'm not
yesterday.
Not interested in these things long whatsoever. But we've been, maybe I'm a little long in the tooth with this call because, we've been bearish these things. CGC, we're talking bearish about this at $45. It's 18. I mean, we haven't got a sector more right than the pot stocks on this show. We were right, we're wrong. We've been bearish, at least I have. I've been bearish these pot stocks for a year. And, and we actually weren't bearish on the way up too, because I was long a few of these because I was riding the story.
You did play them that end back.
Yeah, I was long ACB. I was long Afri for a while. I mean, I was long a lot of these things. We played these things really well. But when the story started to break, you've got to realize, and that's what we always talk about, is story will carry a stock for a long time. When the story breaks, that's when you got to get out because, and when the growth starts to slow, or in this case, actually decline, you don't want to be long these things because value investors are not having any part of these companies, and the growth investors don't want them because they're not growing anymore. So nobody wants them. That's why they keep selling off.
Well, they are growing. I think that's the point.
They're growing. What do you mean they're growing? Year-over-year sales on Elias pot stocks
It
were
was
down.
a joke. They're growing cannabis.
Oh, they're growing cannabis.
Oh my gosh.
I didn't catch you, Spencer. I was
Okay.
going to argue you to the death on that one.
So speaking of cannabis, though, we did have an initiation this morning. Not a super highly covered stock here, but Kushco Holdings, ticker KSHB, initiated at Jefferies at a buy. It's a penny stock here. It's like $1.50 or something like that. But
What stock is that?
KSHB, Kushco Holdings. And
This is a pot stock?
It's a pot stock. Yep.
I don't even follow. I've never even heard of this company.
So
before.
it's not a ton of coverage. Jefferies is probably the largest firm to have coverage on.
It's over the counter too.
No, it's not. It was, but it's not. They're on
KSHB.
I thought they went to NASDAQ.
Oh, maybe. No, I'm trying to look. I looked at the volume yesterday. I can't even get anything on it.
I thought they went to NASDAQ. I guess I could be wrong.
It says
about
OTC on mine.
All right,
It's
then I
OTC Amex.
that. Excuse me.
It's not even OTC on NASDAQ. It's OTC on Amex.
Excuse me. All right.
OTC on Amex, you can't get any lower than that.
no, we like Amex.
No,
I mean,
you
but
just go
the
bull-
listing standards. We look at listing
Lord.
standards here.
You can get very much lower.
Let's not be listing snobs.
All right.
We like Amex. We love you, Amex. I trade Amex.
It's 8:45. I do want to do our hot potato segment now, if that's
Whoa.
okay. Just because I want to get.
I was hoping you'd forget about it
Woo!
No,
after what I did on the hockey
Hockey, I
potato
know.
last week. I'm so embarrassed. I had
Look at
friends
it.
that were just shaming me.
Are they going to deport you? Did any of your,
It was borderline. Yeah.
did any of your friends hear it or
I
not?
couldn't do. Let's not go over it. I was actually
Okay,
devastated by
so
that. I couldn't do anything.
I don't want to play the song because
we got in trouble.
YouTube we got in trouble with YouTube for playing the song. So
I knew that was gonna happen.
You know what? It makes me want to short Google here. I mean, we put in thousands of hours of content for their top rated content.
Oh man.
And then
Okay.
we do.
we can't play the song.
No,
we knew
we-
we weren't supposed to play the song.
We
played
can
the song.
we can play it if we want, but then we can't like promote our videos, right? So
No, okay. So we'll just
Hey, tell you
say
what,
hot
so
potato. hot
pretend that we played the song and that'll be that. Okay.
Joel, sing it.
So no, he's
All
not.
right, Dennis, close your chats. I don't want you cheating.
The category Joel is convinced he knows it. It's very simple. Thanksgiving
Yes.
/ Black Friday is
Oh, I thought you were going to do Thanksgiving like food stocks.
well, yeah. I mean,
I know it.
I mean, I am, but it's like Thanksgiving / Black
Okay.
Friday. So I only have
And he's got a huge edge on me. He's
No,
American. It's
no,
not even the
no,
American. It's
not-
Canadian Thanksgiving was a month and a half ago.
Dennis, you're going to win
Dennis.
this one.
It's not like
You're
that.
I'm going to let you win. Just so
I
He's
you know.
gonna let me win. Joel didn't let you win anything.
I tried to buy him a lunch yesterday. I thought I owed him a lunch.
You actually did.
And
then I was like, I don't think. And I was like, oh, I should have hit that bid.
I canceled.
Yeah, it was you canceled.
All right,
You're like a
okay.
high frequency trader on that bid out there. You got rid of it really fast.
I only have 6 questions, and I think they're pretty easy. So we'll do 3 and 3. I'll start with Joel. So Joel,
Yes, sir.
I looked at a list of the top turkey producers in the U.S.
Yes.
according to the National Turkey Federation, which is a thing.
Yes.
Okay, and of those top turkey producers, 3 of them are publicly traded companies, or at least owned by publicly traded companies. Can you name the 3 of the top turkey producing companies in the U.S. that are publicly traded?
Holy.
All 3 of them.
Yes.
Pilgrim's Pride.
Just name
Pilgrim's
3.
Pride. Tyson Chicken. And Sanderson's Farms.
I would have guessed the exact same 3. They're mostly chicken producers, but I just assume they do turkey too. Those are my chicken stock plays, but I'm assuming if they're doing chicken, they're probably doing turkey, right?
Did I get any of them?
Tyson's got to be in there.
So Tyson is correct. The other 2 are wrong.
What
so
are the other 2?
2 are Hormel,
Oh, Hormel,
Yeah,
of course.
Hormel, and Kraft Heinz.
I would never have guessed Kraft Heinz.
All right.
Like chocolate turkeys?
Okay, Dennis.
That was tough.
Put these. I looked at also grocery stores in the U.S. Okay.
Okay.
Put these grocery stores in order by number of locations in the U.S. from most to least. Okay.
I'm set up for this one.
I'm going to give you 3. Okay.
Most to least.
Most locations to least locations. Kroger, Target, Walmart. Put them in order. Most locations, fewest locations. Kroger, Target, Walmart.
That's tough.
The question is, the Kroger stores, there's a lot of smaller Kroger stores. So I'm wondering if Kroger could actually be the one. I definitely putting Walmart over Target. The question is, where's Kroger fit in? I'm going to say it's going to be surprising. And I'm going to say there's a lot of Krogers around. And I'm going to say that maybe it's Kroger, Walmart, Target.
So Kroger first, then Walmart second, then Target. That's
what
your
I'm going to say, yeah.
Oh, you were so close. You're so close. It's actually Walmart, Kroger, Target. So
I didn't know where Kroger. I knew it was Walmart over Target. I just didn't know where Kroger fit in. I was gonna go that. Yeah. I'm like, there's a lot of Walmarts, but the Kroger, some of them are smaller stores. I thought there might be some smaller Krogers that are making up the difference.
Yeah.
See,
okay.
They all those Kroger superstores now. You see those Kroger? Those are pretty impressive stores.
Yeah.
Kroger's has the best coleslaw when I make my Georgia Reubens.
Okay.
You had those Georgia.
Yeah. The problem with Kroger is you got to have that card to get the discount. I mean, you can go get it. It's free.
I can give you my phone number and you can use it.
I don't like carrying another card. It's like I don't get the sale price unless I have a Kroger
use your phone
card.
number, Dennis. Or you can put it on your keychain.
I'm not telling you my phone number. Not on the air.
Okay.
Sorry.
All right.
I posted my old Bright Trading email like a couple places, and there's so much spam that comes because those bots just find it online. And then they find your email. I actually had to change my email.
Yeah.
So I got hit with so much spam because they find you. You post your email publicly, and you're dead. You're dead in the water because these spider they find you. The spam bots find you.
Joel.
Yes.
Over under.
Consumers
made $3 billion in online purchases on Black Friday last year.
Over.
That is correct.
3 billion. I would think it'd be like way higher than that. I thought there's 3 billion on Amazon.
It was 6 billion. This is just online purchases.
I think
Black
Lisa
Friday.
did like 7.5 million.
I would have thought 3 billion on Amazon alone.
Good. All right. So I'm in the lead.
All right. Dennis.
That was pretty easy.
The Invesco DWA Emerging Markets Momentum ETF.
Oh my goodness.
Okay. Just listen to the question.
All right.
Provides exposure to companies in the emerging market space that possess strong relative strength characteristics. But that's all interesting. More relevant to us, however, is its 3-letter ticker, which is something that you might also have for dessert on Thanksgiving.
Okay, what was the ETF name again?
It's the Invesco. You're gonna look it up. The Invesco Invesco DWA Emerging Markets Momentum ETF. The ticker that won't help you. Okay, but.
Dennis, if you miss
the 3-letter ticker, the 3-letter.
Do you know it, Joel?
Yeah.
The 3-letter ticker is something that you might also have for dessert on Thanksgiving.
I should know the ticker. I probably trade it. I just can't even I get pressure, and I'm like the pressure gets to me, and I just choke.
Someone in the chat got it, but don't look at the chat.
It's so easy.
I haven't looked at it.
Come on.
What would I eat for dessert? You got me all confused here now.
It's a 3-letter ticker. Okay, I'm not going to give you forever here. So
all right, go to Joel. He knows it.
Oh, pie, PIE.
All right, pie. Yes,
we've never traded pie before.
We eat pie.
I was trying to think of something. I've never actually traded that ETF before. It's got to be thin. Oh yeah, it is. Look at the volume yesterday. It traded like 2,000 shares.
So it doesn't count. Okay.
I've never even heard of it before. I was trying to think of what ETFs I know. I've never even traded that one before because there's no volume on it.
Well, now you know of a new one.
Joel, it's good. They're good.
So how many we have left? Because I'm already up. What, 3?
2. Quit cheating, but you're already. I lose this. I never have won. I never win.
We're not done yet. Okay.
I'm the worst hot potato player in the history of hot potato.
Joel. Yes. Going back to turkey producers, this privately owned company is the largest turkey producer in the U.S. And actually, they're on CNBC a lot this morning. They're not now, but they were on like a whole segment earlier. It's like 20 minutes. Privately owned company. So this is a little bit tougher.
Gosh darn it.
But you've seen them in the stores.
Butterball.
Wow, Joel.
I was going to guess Butterball. I had that one. I was like licking my chops at Butterball.
Wow.
I was actually going to get one right.
Yeah, I'm sorry that
throws me the crazy ticker that I've never traded my whole life. And he gets Butterball.
Okay, Dennis.
Oh, I actually was going to get that one. Now I'm done. Dead in the water.
Okay, so
he gets over 3 billion. Yeah, give me an over under at least. 50-50, right?
I'm giving you an over under. Okay?
I need a 50-50.
I guess it's more of like a before or after thing. So the term Cyber Monday, we talked about Black Friday earlier, where that came from. The term Cyber Monday was officially coined by the National Retail Federation in 2006, before or after?
I've heard of Cyber Monday for a long time. I don't know when it was officially coined, though. I'm going after.
Oh, it was before. Oh, man. 2005.
This is like, you could give me like 20, like, or, you know, like 50-50 questions here. I'd get them all wrong.
Oh, gosh. I really thought
It's like my second day of trading all over again. Remember when I had 20 losing trades in a row? I mean, it's 50-50, a buy or sell. How can you be wrong 20 times in a row?
All right. That's
What's
all
the
I got.
statistical probability of a flipping of calling a coin flip wrong 20 times in a row?
It's 2005.
Probably pretty small. I'd do it.
All right.
Sorry. Okay.
Next week I'm going to host. I'm going to just continuously host going forward.
Do it.
The hot potato, because I don't want to be on it anymore. I am terrible at this game.
Okay, but you have to remember, though. That's the thing. You have to remember to do it.
I know that's a problem too.
Yeah. I'll remind you.
You did it on Wednesday. Not even Friday.
I'm not going to be here on Friday. All right. I'll remind you.
You're not going to be here. We're going to be here. I'm doing one for you just by yourself, Joel, on Friday.
Okay.
Going to go to Disney kids movies.
I mean, also, actually, I tried to get Disney Plus last night.
Couldn't do it?
No. Is there?
You couldn't figure out how to subscribe?
He's the only person.
It's pretty basic.
He's the only one.
You give your email and you hit subscribe button. Oh, you have to give your credit card information.
Not that easy. Not quite that easy. Okay.
Pretty easy. I did it in less than 2 minutes, and I'm not tech
Do you
savvy.
need a Roku? I don't know if I have a smart enough TV to do it.
I went and got a Roku just for the Disney Plus. So that's telling you, like, I literally went out and bought a Roku stick just for the Disney Plus.
You don't need a Roku. You need a smart TV of some kind. You need like an Amazon.
My TV was too dumb.
You need like an Amazon, a Fire Stick or a Roku or equivalent type software. I don't know how smart Joel's TV is either, but
you want to hear something funny? I was talking to Emily yesterday. She's going to travel home, and we were talking about Disney Plus, and she said, and she was being a little facetious. She goes, "It's changed my life." She goes, "I watched Mulan, Aladdin." She started naming off all these shows, and then like Even Steven, was that a show or something a long time ago? And she started naming off all these shows, and she just said she loves it. And I'm like, so I said, Lisa, we got to try and get it. But
I watch Frozen every day still. I can't get away from. We had the DVD. Now we just don't watch the DVD. We just watch it on Disney Plus because the 2-year-old demands Frozen continuously, and the Elsa, like the singing scene. She just wants that, like, Let It Go song played nonstop, 1,000 times a day.
All right. Well, on Monday you'll have to give us your review of Frozen 2.
I got it. We got it. I'm taking the kids to see it. I don't know when, but I'm taking them soon.
All right. Before we go to our bonus hour and bring on Sean Udall, let's just get some final thoughts here on this market as we head into what is typically one of the quieter days of the year.
Pre-market. I mean, I was going to give you a pre-market high, 31.50 1/4. That'd be a nice target there. If we were to hold the low, 41.75, our average trading range would take us up to 61.50. So that would be a nice target. If that 50 1/4 holds and we go into reverse, got a target down at 30. But that all-time closing high right now at 43.75. That's looks like a good number. Daily pivot at 31.39. I mean, just a slow creeper rally. That's that's all you can say about this market.
Quick look at opening imbalances. A few interesting ones here. I'm going to grab you Disney, 51,000 to buy. So the party continues in Disney here this morning. Kroger, we were just talking about that. 51,000 to buy in Kroger KR. I didn't see any individual news. I haven't even seen a trade on it this morning, but there's a big buy imbalance. So keep an eye on that one. Twitter, 89,000 to buy. I'm still long-term Twitter, or I'm in a swing trade for Twitter long.
I'm with you.
Johnson Johnson, 33,000 to sell. HPQ, 62,000 to buy. I'm just trying to cherry pick whatever on the big caps.
Yeah.
Deere's 26,000 to sell, still trading down 7 points on its disappointing earnings report. That's pretty well it.
Yeah, pretty quiet. All right.
It's quiet. I mean, these days go either way. So sometimes liquidity is lower, so sometimes you get some pretty wicked little moves. So, and the Friday, everybody likes to take that Friday off. I tell you, that Friday is often a very good trading day. For the simple reason, again, because the market's thinner, you'll see some moves, some extreme moves. Some stocks don't move at all, but then some little stocks really can move on headlines there just because the market's thinner. So just keep that in mind when you're trading thinner markets. So on your smaller stocks, sometimes you can see some significant moves still.
And I'll run the show from home on Friday. We're going to have Mark Chaikin as a guest. And Spencer, I'm pretty good on the Zoom there, huh? You think I should?
Like you said, it's easy to use.
Yeah.
So.
All right. Well, hopefully I won't have to blow up your cell phone if we have any problems. But
we hope not. Okay, so I'll wrap up this show and then I'll stop the recording and then we'll go live for an extra hour here. So I want to thank all of you in our chats who joined us so far, both on YouTube and premarket.benzinga.com. You can catch our podcast of the show every day on iTunes, SoundCloud, Stitcher, Spotify, pretty much wherever podcasts are available, or rewatch the show on Benzinga's YouTube channel, which is Benzinga TV. Please remember, all the information from our show meant to be used as informational purposes only, not for investing or trading advice. And as Joel mentioned, I'll be out Friday, but Joel and Dennis will be with you for Friday's show. So that's it for our show,
hey, Dennis,
our main show today.
Yeah, Dennis, if you get a chance and you have a slow open, pop in and say hi to Sean and I.
Yeah, we'll see. Okay.
All right, so that's it for our main show. Everyone have a great rest of your day. Now, let me bring on Sean Udall, who is the CIO of Quantum Trading Strategies. He's been joining us once a week here in November for just this extended bonus hour of our show. And Sean, let me see if we can hear you or see you. Good morning. Can you hear us?
I can. Can you hear me?
Yep. I can see you. How's it going?
Good morning, Benzinga.
Oh, I love that. You gotta love that. Hey, Sean, how you doing?
I'm good, man. I'm good.
All right, so here we are.
I was just listening to Dennis say that Friday can be a good little trading day, and I agree. Just like the day after Christmas can be a very good trading day, just like last year. Last year was a crazily exceptional trading day. But yeah, I mean, there's certain days that full-time traders, professional traders tend not to miss. We might not be tweeting them much, but I almost always watch the market day after Thanksgiving, day after Christmas, pretty much the whole day.
Yeah, and I believe the SPOOs are going to be open tomorrow. They'll reopen at 6 o'clock tonight, and I believe they'll trade till noon tomorrow, and then off between noon and noon until the 6 p.m. open. So there'll be some good action out there. But let's bring it in. All right, so we'll bring Sean in. Sean, just overall market thoughts here. When we kind of had you on the last couple of weeks, just kind of path of least resistance is higher here. Are you seeing anything in your sentiment indicators or your technical indicators here to tell us that we're overbought? You kind of say that all the time, but anything in your technical indicators we should be keeping an eye on?
Only things that kind of show me that I think the bias is still higher. I mean, I think we've talked about this at least once, if not twice. Probably the most interesting thing is that while many technical indicators are kind of extended and or overbought, the sentiment is very subdued. The only thing that's giving me, and is not even really giving me a sell signal, it's just dull. It shows no fear, is put call ratios, the put call stuff. So at some point that'll matter, but it just kind of feels like we're grinding higher, melting up. I mean, here's the thing that is setting up for what will be a big, like I'll do one of my, hey, NASDAQ's due for 500, 700,000 point correction at some point, because they're running up kind of the same names again. So, Apple, Facebook, the cloud names that we're starting to kind of correct and rectify and kind of work off some extreme overvaluation. A lot of people are chasing those names again. And I'm more talking about kind of like Adobe, Autodesk, Intuit, as well as like Coop, kind of everything around Coop, Okta. So like, CrowdStrike is still way down off of highs. Zoom is still way down off of highs. But I'm more talking about, there's kind of two camps of IPOs. The one that the kind of the Splunk, Workday, ServiceNow, excuse me, camp, and then sort of the Okta, Coop, Twilio camp. There were kind of two periods of time. Quite a few software names came. So yeah, I just anytime that kind of the people get excited about names that are already really high and very extended, we're probably setting up to where we're not that far away from something that kind of surprises people to the downside.
Okay. All right. Let's just talk about just a couple of those individual issues here. Apple, anything you see in here in Apple got hit on the rebalancing from yesterday. Any place where you'd be tempted to short it or what?
I'm just watching it. If things kind of go kind of the way I'm thinking, and again, we probably melt up, maybe have an okay December. Typical tax loss selling victims sort of emerge. So at some point, I think there'll be a fairly clear signal. And I have a kind of a mini thesis this year that the January effect might be more of a normal January effect, which starts before January. In recent years, the January effect amazingly kind of has kicked off like in the trading in January. And you remember this from all of our many years of trading. The January effect sometimes used to start in late November. But it definitely started sort of second, third week of December, kind of at the latest. And then I'm trying to think of the year. I want to say like 13, 14, or 15. Ever since around then, for some reason, the January effect doesn't get an early start anymore. There's no arbitraging of the January effect like there used to be. So at some point, I think Apple sets up as a really good short. Because first of all, if the Nasdaq's going to drop, Apple's going to drop. So you know that, hey, if the market's going down, your short's going to work. But I think whenever you get that flip where maybe the January effect starts kicking in, the end of the tax loss selling's done, then I think you'll see money come out of Apple, Facebook, and other names like that.
How about some candidates for, tax selling in December and then a rebound in January?
Yeah, I'm actually building my January effect list now. One name I posted to my subscribers yesterday, and this I don't necessarily like this name, but I'm thinking about doing long dated calls on it and not paying much for them. And that's Alliance Data, ADS. So this was a darling company for years. It was kind of one of the proponents of large share buybacks to basically increase earnings. So it's not necessarily a traditional, typical January effect stock is typically lower priced, and also lower market cap. But these days, anything below 5 billion is pretty much small to mid cap stock. I mean, it's not big market cap anymore. So they're about 4.8 billion. But there's just a lot of them. I mean, a lot of my optical names, a lot of my 5G names are potential January effect stocks. I mean, you could almost say the whole energy group is a January effect candidate. So there's almost way more names this year than normal. But it's kind of like we've had the last few years. I mean, I'm trying to think of. Here, let me find the juice.
What about pot?
I mean, basically, a ton of the biotechs, ton of pot stocks, ton of energy stocks are all. But here's the secret to the January effect, though. Like most people think you can just buy trash. I mean, like the value I buy there has to be something very compelling about it from a core business. I mean, basically, if possible, I want a global leader or at least a niche leader, usually. So, I mean, here's one of my top 5G/optical names. It would be 26 IIVI. This got hit with a late year sell-off, and I think the last 2 points has literally been almost all January, or not January effect, but all tax loss selling. Pretty much anything 30, 31 and below, I think is just people puking up shares for tax losses. I mean, this is one of my favorite stocks, period. So, but I also think it sets up as a January effect name. CGC for sure. Like I say, I would go with to the degree they are quality. I would go with like a quality pot name. CGC or Tilray. I mean, they could pop huge. I mean, you get out of the tax loss selling season, and there's the absence of tax loss sellers, and there's a few buyers. What are the algos going to do? They're gonna run them up. So I wouldn't be a bit surprised if they go up.
Why do you call
retail? Oh, go ahead.
Why would you call them Why would you call those two stocks quality?
Well, I really wouldn't versus most stocks I operate in, but of the group, I would say they're quality. They're quality in the pot space, right? They have financials you can go look at. They run conference calls. They have earnings reports that are, publicly accessible. They have balance sheets. I mean, CGC has a lot of cash. Tilray might too. But yeah, I mean, but put it this way, I think they're the highest quality in the pot space. But I don't know I don't really know if we have a high quality pot stock as like as a company.
Okay.
I
And
don't know if they've been around long enough.
all right, before we bring we got a guest here coming on at 9:10. Zscaler. I know you've picked on that stock on the short side here. It's showing a little life. I believe it got a initiation or got some positive coverage. You tempted to play this one from the long side at all?
I actually was. I was looking at Zscaler this weekend, and an analyst upgrade actually messed up my trade in Zscaler. I probably would have gone long the name Monday as basically a pre-earnings run or a pre-earnings buy, and either, hey, if you get your trade, you can sell it before earnings. But my plan was to probably hold at least half of it into the report. I mean, I think it was 46. If it would have opened flat from Friday, I think I would have been able to buy it at 46. And it was up like $3-4. It was up like two plus right at the open on Monday. So, hey, look, there's tons of trades. If a trade doesn't set up, I tend to move on, and I don't tend to chase. So
really?
Yeah.
You just, okay. All right.
Yep. I'm just like, look, an analyst upgraded it. It's not 46. I wanted to buy it at 46. It's $50. I'm not going to buy it at $4. It's that simple.
All right. Following your rules. All right. We got 9/11 here, and we're going to bring on Matt Amberson. He's a founder and principal at ORATS. It's an option research and technology service. He was on with us a couple weeks ago, and we're going to do some follow-up here with Matt. Good morning, Matt, and happy Thanksgiving to you.
Hi, Joel. Hey, Sean.
Hey, Matt, how you doing?
Good. Nice to be here. I like your offices there, Joel. Haven't seen those last time.
You haven't seen the world headquarters, and you know what? I forgot to tell the people that were listening earlier. I'm not sure you're going to get to see it, but there's the Thanksgiving Day Parade, and it goes right down Woodward Avenue here, right in front of our office. And if they do any panoramic views, you might get to see our new sign here. Actually, I think it's better than the market sign in Times Square. It's much better because Detroit is taking over New York as the financial capital of the world. So you may get to see that. It's a big old sign. We put stock quotes up there. We put messages, and it says, what's it say at the bottom? It says, born in Detroit and informing the globe. So if you're watching, if you guys are up that early, you're watching the parade, keep an eye out here for Benzinga. So Matt, start out for the people that weren't with us before. Tell us a little bit about your company.
Sure. My company was born on the CBOE, where I used to trade in back traders. It's a research firm. We came up with ways to identify volatility, forecast volatility. I was backing people, so I didn't want to be short gamma and short options. So we had to try to find opportunities, and we would do that using research. Came up with different ways to look at volatility. And then we would use these forecasting methods. And then that eventually turned into ORATS when I got married and stopped trading as much. And we started a backtesting platform to prove out the veracity of our data. And that backtesting platform has really got a life of its own and helped us to identify strategies and do a bunch of things to get these systematic trading strategies, which I like to talk about. A lot of the problems with options is how difficult it is to trade it and manage it, and for the average person. So that's what we're trying to do. We're trying to get RIAs and funds into trading, help them out. We have scanners and implementers where you could send orders in automatically. So that's a lot of what we're doing now, Joel.
What would you say about the statement that 80% of options that are purchased expired worthless?
That misses the point of options in a lot of ways. That statement talks to the options that may or may not have a service, for example, for hedging.
Okay.
We like to use, for me, I like to be invested, and the way to be invested, I think, rationally and from a protected standpoint, is to own what we've tested is some long-term out of the money puts, so I could be more invested in the market. So I could, we may hate the market. Everyone's saying it's horrible. But if you've listened to those guys over the past 10 years, you've missed one of the biggest bull runs ever. Now, if you had some protection, you've been able to participate in that rally, and that gets to your point. Some of these options, and many of them have expired worthless, but they've done their service. They've allowed me to invest, and they've allowed me to make money in other places. So that's how I respond to that, Joel. And also, we can use that to your benefit. You could sell calls. The problem is that doesn't really measure, that one statement doesn't really measure, the total return. For example, if you sell calls, you said, I made money 80% of the time, but when I lost 300% of my money. So you have to look at it holistically. That's why we like back testing. It might say, we look at win ratio. Sure, that's what you're talking about, but we also look at how the returns have been over.
If you're writing that option, then that 80, that's a good thing when they expire worthless. So let's talk about earnings season here a little bit, and a lot of ways that different ways to trade options ahead of earnings. They do jack up the premium, but a lot of people like to go to a straddle. And if you're new to the show, you're not familiar with options trading, you will buy a call and a put at the same price, and the combined price of those will really be the move that you need in order to make, or need to exceed that. There's also straddle riders that are selling that premium. There's a lot of premium in there. So let's just talk about, straddle riding, some of the criteria that goes into it, and what the results were for, I know it varies from stock to stock and sector to sector, but overall, how did straddle riders do this Q3 earnings season?
So if I could share my screen
Sure.
here. I don't know if that'll work.
You'd be able to.
All right. So one of the things that we look at is, how well option sellers or buyers of straddles performed in a season. And what we've done is broken down a season into 6 distinct weeks. And what we'll say is, well, how have those weeks performed in this season, and what does that mean for the upcoming weeks? And we'll also look at it historically, going back 12 quarters. We say, well, what's the average for that week? And it really does change, and it really is important to look at earnings as an earnings season as having its own life cycle. You could think of the stocks that report early. Those are the ones that kind of have their act together. And what we're seeing is their implied earnings move. So let me just explain what an implied earnings move is. So you mentioned a straddle. That's where an option trader buys a call and a put on the same strike price. And that, if there's only one day left and earnings is that day, that says how much the option market expects the stock to move. So it might be 6% on that one day, and that's how much the straddle will be worth. Because when the stock price goes down, the puts are worth 6%. When the stock price goes up, the calls are worth 6%. So that's why you're straddling the fence, so to speak, and you don't care if it goes up or down. You just want it to move. If it doesn't move, you lose all that premium that you buy. So can you see my screen? No.
Yes, we can. Yep.
Right.
Mm-hmm.
Excellent.
That's
Okay,
it.
cool.
Yep. Report for November 26, 2019.
All right. So I want to explain this chart because it does go into the whole earnings season. And so what we have is let me just see if I can do this here. Yeah. So we have this is the current portion up here, and here's the historical portion down here. So what we're looking at is, here are all the different weeks. So here's week 1, and week 1 only had 55 stocks, but they were implying an earnings move of 6.1%, 5.4% is what they had moved in the past. So this earnings season, what we saw was a bloated implied earnings move, meaning the options were priced such that they were over our historical movements. Well, that is because the last couple of earnings seasons have been so volatile. Last earnings season was pretty crazy. So we saw higher implied moves, and these people that bought those moves only saw those 55 stocks on average only move 2.7%. So they got crushed. They only made 64%. 100% would be breaking even. So that was one of the worst weeks that we've seen historically in over many quarters. Usually they do that isn't a very good week. So that, you know, they didn't fare that well historically, but that was a particularly bad one. We said that it would probably be as bloody in the next week, and then we started predicting, you know, as we got later into the earnings cycle, we were posting and blogging and getting out to our subscribers that you have no fear. The owners of options will make their comeback, and they did. They had a really good week 4, and that's what we've seen historically. The week 4 has traditionally been good. They were implying moves of 6.2%, and they actually moved 6.8%. So, you know, I don't know how much detail you want to get into, Joel, but this is how we like to look at earnings, like holistically. We like to then break it down by weeks, and then we like to see how the earnings are progressing, and we like to look at what the implied earnings move are versus regular earnings move.
So what's your overall conclusion then from this earnings season?
The overall conclusion was, you know, I think that option traders around earnings really need to look at what's going on in the market in the past, you know, and not just focus so much on the history of the earnings move for the stocks. Because what's happening is, you know, when the trade wars were going on, and then we were getting earnings coming out, and July was just such a crazy season. You know, the option sellers really had a lot of pain because things were moving all over the place. And then what happened is there was kind of a hangover effect for this earnings season. They pumped up the implied earnings move. So I mean, I think what happened this earnings move is that hangover effect of a lot of movement in the last one. They overvalued it quite a bit, especially in the early weeks, and then and in the last week where they were way up at 8%. For the implied earnings move, 7.8%. So
yeah, I just wanted to move on here. Do you have any ideas for trading options post earnings after they zap all that? What is it? The Vega, is that the term that they use, or the time premium on it? Do you have any ideas for post earnings options trading?
Yeah, absolutely. So one of the things that we look at is where the implied volatility should fall to. So let me see if I can pull up a earn move report here. So we'll look at things. So we'll look at things like this is the important part for post earnings. So what you want to when you're owning options after earnings, or selling or trading options after earnings for that matter, you want to look at X earnings movement in the stock. So you look at historical volatility calculations. By the way, there are good volatility calculations and bad volatility calculations. We calculate it 3 ways. We could get into that at a different point, but you want to look at X earnings volatility movement, and then where the implied volatility falls to. So what will happen is the volatility will be elevated. For example, in Autodesk here, the volatility is elevated going into earnings, and that's what you'd expect because you have that binary event. And so, you know, it might be 40, and then right after earnings is announced and the move happens, you know, they always pummel the implied volatility, so then it gets down to a certain level. So what you want to do is you want to be ready at that level where you'd be a buyer and where you'd be a seller. So they one of the things that we do is we strip out where, you know, yes, it's 40 right now, but we expect it to fall to 32.8. And at 32.8, that probably is a little bit elevated. So you might be a seller up there because we think it's only going to, if it reacts historically X earnings like it does, it might only move at a 30.3. So to answer your question, post earnings, you really want to look at where they were implying the volatility to fall to, before earnings. That gives you a key. And then you want to look at what you think it's going to move at. And you should do your historical earnings moves, taking out the day of the earnings move. So you have some expectation and forecast of volatility, and then that comparison will help you guide your options trading, Joel.
All right, quick question from the chat here. What do you do the most? Do you usually sell premium on earnings short dated or buy longer term directional before earnings?
So for me, personally, I mean, ORATS is a research firm, so we don't really put out a lot of recommendations. But what I like to do is I like to just do one side. I'll sell, either buy or sell based on the implied move. So I'll do, and I'm chicken, so I don't do naked anything. So I'll do either a short call spread, short put spread, long call spread, long put spread, just depending on where the pricing's going. Okay. And I'll take a chance on either side. But I don't want to, some people will do an iron condor, which is the simultaneous selling of a call spread and put spread.
Correct.
I'll try to find the side that I think's a little bit more overvalued or undervalued. We have a slope calculation that helps us determine that. So when the slope is high, to our subscribers, that means the puts are high. So that might, and then we might, but what generally happens during earnings is the slope will kind of level out, because you don't know whether it's going to be a multi-standard deviation move the upside or downside. And then what happens after earnings is it steepens out, usually because most people are concerned about a fall to the downside, whereas you kind of climb up and then the market will fall down. That's why there's a skew in there on equities. So I'll look at the slope, understanding that it's probably going to steepen out, and then so I'll make my trade based on slope, based on movement, and all that. I hope that wasn't too technical, but that's what
no. Okay, before we let you go, just talk real quickly about hedging portfolios, back testing, and implementing back testing.
Sure. So one of the things that we do, and we talked about this before, is we look at strategies, and I think this is a very good way for people to learn and see how strategies work in the long term. So one of my favorite ways to protect my portfolio is an extremely long-term put. So here's a SPY put that's 555 days, so almost 2 years. And if you would have owned that strategy in 08, you would have made 19%. So these are out of the money too. These are 20 deltas. And the thing I like about this is it doesn't decay all that fast. So, you're going to lose, 2 or 3, 4, sometimes percent during a year, but you're able to be invested, and you're able to then make some money when the market moves. So that's one of the things I like to. To look at as far as hedging. Also, of course, you could do some other strategies, put calendars, call calendars. And it all depends on volatility levels.
All right, we're going to wrap things up here with Matt Amberson. He's created a special promo code for the PMP listeners. I just posted here in the chat. So if you want to learn more of his product, perhaps do a trial, back testing, data API, historical quotes, dividend, and earnings. It's got all that good stuff there. Matt, thanks for coming. Happy Thanksgiving, and we'll talk to you again soon.
All right, Joel, thanks for the invitation. Enjoyed it.
All right, S&P's just hanging out here, mid-range, 31.46. So we're smack dab in the middle, 50%. So let's hold here and go up and test that pre-market high. Sean, how you doing there?
I'm good. That was interesting stuff. I'm kind of a data geek myself, so I can relate to much of that. spent many years doing lots of back testing of all sorts of data, options included.
All right. And what, for your trading, you say you're more of a stock guy, right?
Yeah, I kind of go back to, okay, where are the billionaires at? And so if you look at, there's lots of billionaires like Warren Buffett who bought good stocks, traded good stocks, and held good stocks, et cetera, right? Very, very hard to find a billionaire. Now, there are probably a couple billionaires at firms from like the CBOE and CME and things like that, but hard to find a billionaire who made $1 billion trading options. So I'm not discounting what the guy's doing, because I use options a lot, but I'm more of a, by the way, I think the data, I think you said 80%, I think it's more like 95% of all purchased premium. So all bought calls and bought puts expire worthless. So over my time, I've been more of a put seller. But you have to really know what you're doing when you're selling puts, because your payoff is much lower than your risk. So you can use spreads and hedge them, but the best thing, I've told this story many times. The bulk of my Apple position in 2013, I acquired by selling puts. The key was I had the money to buy the stock when it was put to me. And so, I accumulated a very, very good Apple position at very good, very attractive prices. Selling puts helped me do that. And, so that I've had some very, very large historical scores. I was a put seller on Google at one time. I don't think I was much of a
stock. They were cash secured. You had the money.
Yes. Yeah. So honestly, that's kind of my favorite, cash secured put sells. But again, you really have to know what you're doing. I think I was on the show one time with you where I just closed out a 22 bagger on Qualcomm. So that was purchased calls. Those, in that case, those were leaps. So when I do buy call premium, I tend to buy long dated premium. So one thing he said that I thought was very smart was how he says he buys very long dated puts, and that helps him stay in the market. That's a very good thing to do. That's the kind of way you want to use options to your benefit.
All right, let's just talk about the market here real quick. We opened up and right back to unchanged. Opened up below mid-range on this session. Probably just one little seller came in here. Took us down to 43 and a quarter, 43.75 was your close. That's your all-time closing high from yesterday. So see if the market here can find some support. But a little bit of selling here at the open, pre-market low, 41.75. So I'm asking people here if they have any issues that they'd like to talk about or have Sean and I take a look at. We do have one here that reports, it's a late reporter, Federal Express for WebCoin, FDX. So why don't Sean and I pull up our charts here simultaneously and take a look at this chart. And
now, did you say FDX? Isn't that FedEx?
Yeah,
FedEx.
Yeah, FedEx.
Oh, okay. Yeah.
Yep.
All FedEx.
Long term, looks like the all-time high is in it on this one, huh? We were over.
Kind of. This is one of those high-quality stocks that's had a big sell-off. That is probably a better buy than a lot of sexy stocks right now. I'm personally not doing anything here. Let me pull up this thing had a run though. This thing had just a crazy run. I guess it's what are they digesting, Joel? Are they digesting that they're really not working for Amazon anymore?
Yeah, I think so. I think that's
which
good.
By the way, I think that's a good thing long term because they're not sacrificing margin anymore. But obviously the Amazon deal kind of goosed the stock, goosed revenues for a while. I guess that's what they're digesting. So now you have to find, a floor or something to trade against.
Yeah, 140. If you're looking at it, like we'll go really longer term, trading perspective here. If you're picking it up at 160, you're leaning on that 140, 20 points. You're trying to get 40. It really has not had a meaningful retracement since it peaked in 2018. And that's
No.
what I look at. So 274.66 and then 140. What's that? 135-point move. Let's call that 70. I mean, 200, 210 would not be out of the question here on a major retracement, but it
No.
just seems like it has too many down days where it just gets whacked, and whatever the news and earnings. Have a look at the earnings trend. Let's move. Spruce holding in here above the close, 43 even your low, trying to stay green on the session here. Let's do one that had a big day yesterday. And you always like when a stock has earnings and then trades the following day, it's always interesting to see the price action. Did you see what they did to Dollar Tree yesterday?
I did, and these kind of stocks, Dollar Tree, Dollar General, again, they've been riding a very hot hand. So is that an overdue sell-off, or is that a sign of business conditions? I honestly don't know. That's kind of not my core space, but I do look at stuff like that. Again, to me, that's sort of a sign of we've been having these signs, these pulses of rotation away from growth to value, especially growth that's very overpriced. And I kind of I think Dollar Tree kind of fits that mold.
All right.
Dollar Tree, Dollar General, those kind of stores.
Just real short term here. For this one, really important to hold that low from yesterday. That low was, down at 92.65. So buyers are stepping up ahead of it here at this point. So if you're taking just a blind stab in the dark, you think that sell-off was overdone, picking it up here in the 94 handle, you're looking at that low of the move, 92.65. Also, you see kind of setups here that I've seen work on good occasions where you break that 92.65, you go down to the 91.80, let's say, and then you close above that previous day's low, just kind of flush out everybody was in yesterday. But digesting, maybe just, stop going down for a day or two. But I don't have any, really, I don't think I've ever traded the stock in any short-term and long-term trading. I just don't really understand the concepts. How about, we were talking about some IPOs here, Work. And that's been beat up. That's Slack. We talked about Work. Let's talk about Work, and let's talk about Zoom here.
Yeah. So Work has a lockup coming. So that will be very interesting. Talk about a tax loss victim. I think this is having a lot of tax loss selling pressure. This Work is on my January effect list for late December, early January. I think it could do a lot better. The thing is this is going to be a simple one. Basically, you got to watch it a day or two before the lockup expiry and a day or two after. And one stock I caught very well was FSLY, because I think that was super preloaded by the shorters ahead of the lockup, and literally the day of the lockup. So normally a stock should keep going down on the lockup. Fastly went up like 20%. So Work, though, it's a bigger lockup. But there's another one, Chewy. Chewy has a big lockup coming. And then there's one I was looking at the other day that has a smaller lockup, but I can't remember the name of it off the top of my head. But anyway, Work's got a pretty big lockup. Here's the other thing, though, with Work. It's a direct listing. So direct listing lockups should not have as much pressure, I don't think. And Work's been tortured. I really like the stock long term. The last sell off was when Microsoft came out with some data that, bragging about their product called Team. Well, no Team, they don't have to buy anything, and they got a 3 billion installed user base. So again, I keep wondering, well, why don't they have way more than 20 million users on Team? So I don't know. I think Work could potentially be a disruptor. Actually against Microsoft's core franchise. We'll see. That's kind of a long-term call, but we'll see. What was the other one? You said Work and Zoom?
Yeah, we're talking because we like the product.
Telling you, man, the Zoom, I just pray there's just a nasty, bitter growth correction again, which I think we're going to get one in Q1 of next year, by the way. And hey, this stock's on the docket for me as a future long. I just don't know,
can't pay off.
I honestly don't have a level yet. It's so expensive. I just don't have a level I know I'd buy it at.
You'd be comfortable at. Okay.
Now you might have a level. If you do, please tell me.
No, I mean, no. I mean, it's if I was gonna try it for a trade, I think what's interesting is that you had the IPO low at 59.94, and then you came back down to that area. Just missed it. 60.97 is where you got to. So that's maybe, well, that's $15 away, but it came back down to that area. I'd have a little bit of interest as far as retracement or looking at it. You went from 107.34. What's that? You basically had a 45. I mean, maybe if it got back up into the 85, 87 area, I look at that as resistance, your 50% retracement. But no, just like it, like using the product. It's easy to use, but how does that really translate into making money? Rob Hood wants to know if you have any insight on CDNS.
I know the stock pretty well. This has been a pretty. It's kind of the sister company to Xilinx. So, if I remember right, I think they had their typical good report. I think stock got hit. It's very expensive stock for semiconductor stock. That's the one thing. A lot of these semiconductor stocks don't really trade at valuation ratios they used to. I want to say these guys are 8.5, 10 times sales. That's like a software type valuation. They're in their defense, they have a lot of higher margin revenue than a typical semiconductor company. But I don't know. I mean, this is one of those stocks where it's like, yeah, it could keep going up. I think a better buy on it was a couple years ago, probably half the current price. So,
Yeah.
I'm not one to chase a stock that's 70, banking on it to go to 75 or 80. I'd rather buy a stock that's 26 that I think's worth $70. So, and there's plenty of them. So, this is kind of one of those stocks. Most other people trade stuff like this. I just don't really trade stuff like this. I have shorted Xilinx, and that was a good short for me. I mean, this might set up as a short.
It's setting up here for me. Like, this is like typical Robinhood chart here. Well, first of all, you're getting everything. This bad red day here. I'd find out there. That must have been earnings or
I'm pretty sure that was earnings. I think they bought. It was one of those kind of dumb, like they actually bought it after hours, thinking because the numbers were like a beat.
Yep.
But it really wasn't that great of a number relative to where the stock has appreciated to. And so, yeah, it got whacked pretty good off that morning high.
Yeah, and so the high on that day was 70.50. And then if you go back to September here, you had a pair of highs at 70.90 and 70.94. So this whole 70 to 71, I mean, it's just a sell zone here. And if somehow you can, get a couple close, clear 71, get a couple closes over 71 here, but boy, you're just getting a lot of losses back here for a long time. I just don't know if it has any news or any earnings coming up here, but that whole 70 to 71 area, it might be one of those things where those, if you've been trading this well on the long side here, you accumulated some profits and you think it's going to 75 or 80. Maybe this one might be a little bit of a stock replacement strategy where you take, some of the profit from this run up from under 63, you book it and maybe, put some call spreads on or something like this. But, yeah, I mean, this is an area that failed at in September, not quite there yet. You failed there in October, so you're itching back up to that area, Rob Hood. So that's your setup. Let's just talk about one more IPO here. Not a recent, but Beyond Meat, kind of out of everyone's system here. What do you
Literally. We could have a lot of jokes about that, man.
Yep.
You know what? I just pulled up that chart.
I wouldn't want to short it. I don't know if anybody are going to be eating any, fake turkeys or anything. But to me, you had the big sell off. You haven't, maybe just everyone that wanted to sell it has sold it already.
Dude, the chart's curling. Again, this is I don't like names that feel like coin tosses, and this feels like a coin toss. However, if I'm tossing the coin, I'm going to say this thing's it's going to bounce. It's going to bounce. Could be a nice cheap option play, for people like to speculate, do a little option cheapy option gambling. I mean, a move back to 100 to 105 wouldn't surprise me at all. So I don't know. We'll see. I mean, this thing went crazy town. So, it's still very expensive. It gets a lot of press coverage. I find more success operating names that aren't on CNBC. 24 hours a day.
Have you had a Beyond Meat burger?
I've not had a burger, but I've had the Beyond Meat tacos. And I think this only affects certain people. I catch a very notable aftertaste. The initial taste is fine, but I definitely taste an aftertaste with the Beyond Meat product that they have there. And so I don't know. I should try the burger. I'm not a big fan. I don't hate these guys, but I just don't eat at Burger King very much. They have Impossible there.
Yeah, Impossible.
So I have yet to try that. So I'm just, fatty things, not fatty, but fad, like FAD, are generally not my deal. I think this is going to be kind of one of these fad deals. I mean, hey, if you liked it early on, it was, and you were lucky enough or smart enough or both to ride it long and just believe it was going to go higher. Hey, more power to you. You made a lot of money, assuming you got out and didn't reload it 5 times.
Yeah,
and give up your gains.
there's some people, I'm sure that this tax selling candidate too here. I don't know where people bought it.
It could be, but this is not one I would call a January effect play. It doesn't have a valuation criteria, but yeah, I don't know. Crazy stock, and literally the next 20 points could be either up or down. Hell, the next 40 points could be either up or down.
Let's see here. Andy Wise asked here about Datadog. It's not really a stock I follow very much. Pulled hard off that all-time high from a few days ago. He was asking about buy the dip opportunities here, and I would just say if you're going to do that, just keep an eye on, I would call it there's a pair of lows, 39.71, 39.81. If you think this pullback off the high is done, it's going to run back up. There, to me, that would be my uncle point. Under that, you get into, you could get a shot at under $38, and after it gapped up, it had a couple lows in that area. So I wouldn't worry about any major downside until you started to work in the gap in this one. But let's see how you digest that candle from yesterday. That was a pretty big red candle. Any comments on Datadog?
I very much like the product. I like the product. I like what the company does. I like the theme. Just one of these very expensive stocks. So instead of Datadog, I was buying ESTC, which is Elastic, in the between 70 and 72. So not exactly sister companies, but it's AI, it's machine learning, it's data intelligence, it's business intelligence, it's you trying to maximize the information you get out of your data, whether it's stored data, whether it's discrete data, whether it's numbers, whether it's words, blah blah blah. I mean, Splunk has been in this game. Splunk was kind of my old favorite of this lineage, if you will. But yeah, so I was buying Elastic on their sell-off, pretty good sell-off off of highs. That's ESTC. And I think it got to relatively attractive valuations given its growth. So Datadog is kind of one of these names. I'm just going to wait for it. I waited for Elastic, and I got really good buy levels on it. And I'll wait for lockup. I'll wait for a couple more quarters. This one's too expensive for me to buy, but very high quality revenue producer. And I think this company is going to be around and be successful for a real long time.
And how about a throwback to an old-time stock? JB Betts is asking about Hasbro, the toy company.
Don't know it. Never follow. I mean, I know them, but I don't do any work on Hasbro.
Okay. All right. Box is making a nice move today. And I believe I think this is an earnings move, right?
It is. Yeah. Yeah.
So they're liking the number here. They had let's see here. They, in line EPS, they lost a penny. So don't make a ton of money. I'll just look at this. I did see the candle. I'll just look at it real quickly from a technical perspective here. And you're making a nice move. I guess if you're a major, if you're holding out for a major target, closer to 21. I see 2 monthly highs at 21.19 and 20.88.
Sure.
That's a ways away. For this one, I would just keep an eye on like the average daily range, and I think we've probably already exceeded it. So you just got to see if this is one that's just going to have a crazy old day, going to get above 19, hold 19, going to 19 and a quarter, et cetera, et cetera. But nice move. And boy, oh boy, if you were inclined to buy that higher open, just a couple ticks above yesterday's high, that was a heatless trade. And that one, any comments on Box?
I can't say I've ever, I used to like the stock around 10, and I'm trying to remember what year that was. Probably not that long ago, maybe 2016, 17. Kind of got to a crazy level, right? And then had a pretty vicious sell-off. I looked at it, the company I like better, that's a relatively similar company is Dropbox. Dropbox is traded horribly. Probably a lot of lockup pressure, just a lot of VC selling pressure. I'm probably going to re-engage with Dropbox maybe December or early next year. So I just kind of like the setup there better. But hey, this wasn't. This one isn't one of the super expensive tech stocks like so many of them. So I can see why people like this stock. It's not my favorite name, but it's got a good steady kind of long-term growth trajectory. Fund managers like that kind of thing, as you know. So, I wouldn't be surprised if it extends. I wouldn't be surprised if it extends this move. It's not like, say, the valuation's not egregious at all. So a lot of guys might kind of say, look, we can ride this to 22 or something.
Yeah. Okay. All right. That's good comments on that. Did you said you might have a value stock that was on your radar? Did we already cover that? I thought we do something.
I'm not sure we really did. I could. So another stock that reported, and this is one we haven't. I don't think we've talked about it in our November segments here. Okay. But I think people should really take a hard look at Dell. And I know Dell, might appear boring, and the chart just kind of looks like, well, it was kind of a fake out, like nice move higher, and then kind of gave up most of the gains, and it's off $2, and what is it down here? Almost 3 today. But here's the thing, and I think this is one of those things everybody knows. But Dell owns a massive chunk of VMware.
Yep.
So this is just simple arithmetic. So they own like 81% of VMware, which is worth somewhere between 15 and 20 billion, more than Dell's total market cap. So just kind of think about that. So you can buy Dell. So if you kind of want to own a cheap, long-term, slower growth software company, I don't think VMware is the worst of the lot. I think it's solid. It's not. I love the stock standalone at like 120, 130. But hey, you're basically buying VMware, which is VMW, at about a 20 billion, like a 15, and 15 is conservative, might be as much as a $20 billion discount. So now if you kind of think about this, they also own Pivotal, which is a stock I had that got bought out. They also own SecureWorks. Dell also does 91 billion in revenue. They also do $7 billion annual cash flow. So you're basically getting all of that for free. Now, that doesn't mean it's going to work. EMC owned 80% of VMware for a long time and never really got the full value out of it. They eventually did get bought by Dell. But Yahoo is a name I did very well on when it was the Yahoo pre-Alibaba IPO. That stock traded as low as 12. It was around 15, 16 when you could literally do simple arithmetic, and it was worth $40 on their ownership of Alibaba. And guess what? It went to 45. Like once the Alibaba started trading, Yahoo went to 45. So I don't know the thing that unlocks the value in Dell. I just know there is a lot of value in Dell. And it's selling off. Like I told my subscribers last night, it's literally stupid for Dell to sell off in an earnings miss. Because again, the company's worth something like $55 billion just on the VMware stake, right? So, and I think VMware's up. I think they reported, and I think the stock's up. So anyway, this is just one of those ones. This will get rectified over time.
The math usually ends up working out.
The math ends up working, man. The market math. Somebody will buy it. maybe it takes an icon. Maybe an icon comes in and says, hey, this is kind of like Apple in 2013. Maybe I'll just buy a great big old steak in Dell and go relax. And there's not much downside in it, that's for sure.
I'm a Dell. I got old Dells. That's it. Not much on the Apple. I got a lot of Dells. Spinner wants to know if you follow GSKY, Green Sky.
I don't think so. Let me pull it up.
Lower price stock. Got to get rid of this seller at the 750 area, Spinner. I don't know who it is. It's not a heavily traded stock, but been very persistent. 1, 2, like last 8, 10 on the lows right here at the 750 area. Holding up there. Not sure what it's going to take to get above it, but clear out that seller at 750. Maybe look at $8 here. That could be a potential target. Let's just we only got a few minutes left here. Let's just talk about our old favorite here. Twitter coming up 21 cents here.
It's a lovely little chart. Lovely little curl on it.
Yep. And sold it out hard after earnings, held that earnings low, still getting into the gap here. I mean, on one hand, yeah, you could look at, but I mean, Sean, I think I've said this to you before in our other conversations. I mean, haven't we waited a long time for this company to figure it out?
Well, but if you waited, you tripled your money. So, I mean, look, it went from 15 to 45 plus. So there's been plenty of trades in it. There's been plenty of chances to take gains. I mean, a triple's pretty good. So what I would say is, I think this is just sort of changes, price of Twitter changes way more than Twitter's business. Here's one thing I'll point out, since we don't have a ton of time. I'm not a huge believer in fibs, right? We've talked about Fibonacci's. However, there are times I think they line up really well, and I think they can be pretty powerful. So if you look at the gap, the gaps on Twitter, the high gap and low gap post earnings, they line up very well with Fibonacci retracement levels. So a key Fibonacci level is 35.29. I think Twitter gets there with ease. And the next key Fibonacci level is 37.31, which is very close. I mean, the bottom of the gap's like, what is it, 37.80. So let's just call it that's the gap fill. So that lines up almost kind of magically with the 50% Fibonacci retracement. I think those are going to be powerful again once tax loss selling's over. I mean, people are starting to buy Twitter again, you can tell, but I think there's still some tax loss selling pressure. So this could be a stock that has a real good run first 6 months next year. If it does, I won't be surprised.
All right, I'll just one more that you've it's been a little bit of a thorn in your side, but you've been consistent on it. FireEye, it's finally had a run. I'm looking because it always stalls at 16. It didn't stall at 16 here. Had a nice run up, trading in the 18 handle. I know you've traded in 1657. I know you've traded in and out of this thing several times. Is it just are you ready to wash your hands off of this resistance? You're still sticking with it?
No, I mean, I kind of have over time. I mean, I definitely don't, I'm down to kind of a placeholder position in it. This one definitely is one of in sort of the long-term loser camp. I mean, you're just going to have those. But here's the funny thing. It's like it's waiting to kind of like show it can be a $20 stock again. And now it's kind of looking like that. We always talk about change in character. So the one difference is, like, I don't think the earnings report this quarter was any different than it's been for like last 2 or 3 quarters, but there's a major difference. They've been buying the stock ever since the quarter. Now, some people would say, well, there's M&A and there's this, I don't know. There's a couple stories about M&A, but that happens to FireEye 3 times a year. So it seems like the buying has been pretty steady and pretty solid since they reported earnings. And so to me, again, that's a change in character. You have resistance at 20. Above 20, you don't really have any resistance till like $30. So that's a pure technical view. So we'll just kind of have to see what happens. I think this could become a really good technical trade over 20. And if I need to, I can buy more stock. So, but this could be an interesting, these dull stocks that get left for dead, but the business, they just keep grinding away and doing their business. Sometimes they end up, you can have, I mean, NVIDIA's chart at one point looked just like this. At one point you pull up a 5-year chart in NVIDIA, it looked like a stock that couldn't get above 25 bucks. And then lo and behold, things changed, and they changed in a huge way. So, I don't know. We'll see.
All right, Sean, we're going to wrap things up here on pre-Thanksgiving show here. S&P's not really showing much here. We've just hanging out unchanged. That little selling did not take you down to the pre-market low. Pre-market low 41.75. Your intraday low 42.25. So just hanging out here. Pre-market high 31.50.25. If you get a little buying spree, that would be a nice target on the upside. If you take out that pre-market low, not much in the 31.30 handle really to lean on. Your intraday low from yesterday 31.29.75. But looks like we're shaping up here for just a quiet session. So Sean, 10 o'clock on the nose. Thanks a lot. It was
You take care.
Yep, and we'll be
have a great Thanksgiving.
Okay, thank you.